Welcome, friends. This is Ramkumar bringing you the 38th episode of the Educative series. Initially, we'll talk about the disclaimer. I'm currently not registered with the regulator in India like RBI, CBI, IDEI, etc. The remaining part of the disclaimer you can read at leisure on the page in front of you. We will talk about the summarization of IPO prospectus issued by Aditya Infotech Ltd. Now the issue details are as under. There is a window for the anchor investors to be investing on 28th of July 2025. The issue itself opens for the general public on 29th of July 2025 and closes on 31st of July 2025. The minimum application is 22 shares with a floor price of rupees 640 and a cutoff of 675. Of course, this is a 100% book building issue. If you look at the minimum application and the floor price and cutoff price, the minimum amount to be invested would be 14,080 at the lower cutoff and rupees 14,850 at the upper cutoff. The total shares in offer is 1 crore 12 lakhs 23,759 shares of rupees 1 each. Employee reservation is available for the employees. Now we look at the financials for the year 22-23, 23-24 and 25-24-25. We will look at revenue, profit, assets. In terms of revenue, the company has clocked 1,646 crores in 22-23, followed by 22-84 crores, followed by 27-82 crores. So if you look at the first year and the third year, that is 23 and 25, a percentage increase of 69 is observed. Now profit or profit after tax is for the same period is 96.9 crores, 108.3 crores, 115.17 crores. So here again for the said 2 years, that is 23 and 25, the difference is 18.82%. Now if you look at the revenue profit percentage in terms of how much of percentage of profit is of the revenue, then for the same 3 years it is 5.89 followed by 4.74 followed by 4.14. So you can see that the PAT is stressed in the sense that we are getting about 4 to 5% in terms of the percentage of the revenue that is owned by the company. The total assets owned by the companies for the same 3 years is 1,214.4 for the year 23, followed by 1708.7, followed by 1644.1. So if you see the said 2 years, that is 23 and 25, the difference is 35.38%. Again, if you look at the revenue and the total assets in the percentage, the asset is 73.77% for 23, 74.80% for 24 and 59.09% for 25. So to that extent, the assets of the company is reduced to a certain extent in terms of percentage. Now I'll talk about the company. The registered office of the company is in New Delhi. The corporate office of the company is in Noida, which is in UP. It's actually NCR, that is National Capital Region. The BRLM, that is book running lead manager for this company, there are 2 of them appointed. It is ICICI Securities Limited and IIFL Capital Services Limited. The RTA for this issue is MUFG in time. The underwriter is to be decided between them, and it will be declared after the IPO allotment is done and before they file the prospectus with ROC. This will be listed after allotment with BSE as well as NSE on the main board. In terms of the percentage of the offer, fresh issue is 38.46%, while OFS portion is 61.54%. The company was founded in 1995 and the current MD is Aditya Kemka. The company is in the business of advanced video security and surveillance policies and solutions for enterprise and customer solutions. They have a brand which is quite famous, that is brand CP Plus. The major revenue for this company is from Dahua, which is a Chinese firm, which contributes almost 25% of the revenue. The manufacturing or the assembly is done by Dixon, again having roots with China. There is no recurring revenue for the company, so it's all fresh business for the company, either from the same clients or fresh clients or new clients. The company is reliant on distributors. The distributors approximately contribute to 80% of the business of the company, and the remaining is done by the system integrators or others. As far as subsidiaries concerned, the company has got two subsidiaries, one in India, that is AIL Dixon Technologies Private Limited, and the other one would be Shenzhen CP Plus International Limited. The objects of this IPO is for repaying debts or borrowings and general corporate expenses. There is a monitoring agency appointed by the company, that is Acute Ratings and Research Limited. Now, if you look at the CAGR of the industry, the CAGR of the industry is predicted to be about 16.46% up to 2030. That is from 2024 to 2030. The company has reported a negative cash flow for 2024, which if it persists, could create pressure on the bottom line of the company and hence the profitability. The companies claim that they have got limited supplies. The top 10 suppliers contributing to 93% in 23, 94 in 24, and 95.38 in 25 in 2025. To that extent, 95% of the supplier is the top 10 suppliers. The majority of the import also is from China. So if you look at 93, it is 95%. In 2024, it is 90%. In 2025, it is 74%. They have got it little reduced from 95 to 74, but still it is very much on the higher side in terms of reliance on China. So if there is any issue between the countries, that is China and India, in terms of allowing import, not allowing import, or a higher tariff or taxes being put on imports from China, there could be issues for the company. As far as customers are concerned, they have got more than 2,000 customers. The top 10 customers account for 21.04% in 23. 23.82% in 24 and 18.8% in 25. To that extent, this is quite okay in terms of not having concentration risk. As far as capacity utilization is concerned, as far as cameras are concerned, that is CCTVs, it is 70.59% for 23, 64.88% for 24, and 78.76% for 25. In case of DVRs, it is 85%, 60%, and 70%. So as far as the lease, rent, or ownership is concerned, the branch offices or service or experience centers are on leased premises. However, the main office, that is the register office and corporate office, are in the company's own name, which they have let out to one of the subsidiary companies. If you look at the rating for debts, the long term and short term that they have taken or obtained from the banks, it is CARE AA minus with a stable outlook for 23 and CARE BBB plus with a stable outlook for 25. So you can see that here also there is a degradation in terms of the rating for the company in the last couple of years. If you look at the short term, then it is CARE A2 plus for 23 and CARE A2 for 25. Here also there is a slight degradation in terms of the rating. As far as operations are concerned, as we mentioned earlier, the large amount of raw material is obtained from China, and this could affect profit if there is an issue with China in terms of them not being able to send it outward to India, or India have putting a higher tariff or taxes on imports from China. As far as quality is concerned, they have to ensure that the good quality is maintained, as the it's a sensitive industry, in the sense that CCTV and VCRs are seen very seriously by the security team of the companies or of the individuals who have used their services. So if they fail on the quality, there could be problem with respect to reputation risk as well as lesser sales in future. If you look at in the earlier issuances, that is in the last 1 year or the previous financial year, they have issued a bonus of 4:1, that is 4 shares for every 1 share held, and also a private placement. Plus they have issued ESOP, which some of the employees have not exercised as yet, so they may exercise in future. If you look at in terms of agreements, they have got agreements with partners for products and design. These are all long-term agreements, so the possibility of the agreement being cancelled or stopped is lesser, but still it is there on paper. In terms of non-compliances, company has got quite a few non-compliances in terms of not filing returns, income tax returns, not filing PF related returns, not filing ESIC related returns, the state tax related or professional tax related deviations are there for practically all the states that the company is operating in. So to name these states, it is Madhya Pradesh, Orissa, Gujarat, West Bengal, Telangana, Maharashtra, Andhra Pradesh, Jharkhand, Kerala, Bihar, Tamil Nadu, and Karnataka. They also have issues with customs in terms of them not filing the custom report on time. GST also same issue. Of course, because of the non-compliance or because they couldn't deal with the timelines, there has been a cancellation of land parcel that has been allocated to them in Noida, was allocated to them in Noida. In terms of internal control, they have not mentioned that the above issues will be sorted out by way of having better internal control. Also, there are some old records which are not available with the company. We have summarized the RHP and placed it for you for your perusal. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financial and the strengths and weaknesses of the company. In light of the above, there is no reference to the correctness or otherwise of the price on offer, prevailing grey market price, possibility of listing day earnings, etc. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel. If you look at the source from where the information has been picked up, it is exclusively picked up from the red herring prospectus filed by the company with SEBI, BSE or NSE. Should you have any doubts, queries or suggestions, kindly contact me at ramkpharosay@gmail.com. Thank you.